This is Matthew Kratter from Trader University, and today I want to flesh out some of the details about how Genesis Trading got wrecked. So we have this company, this parent company called DCG, Digital Currency Group. This is the parent company that owns all these subsidiaries, and this parent company is run by Barry Silbert, who's very well known in the crypto and Bitcoin space. And Digital Currency Group has many subsidiary companies. These include companies like Grayscale, which is the issuer of GBTC, as well as Genesis Trading, which is pretty much the only large crypto prime broker out there. Now, prime brokers are a little bit like the equivalent of your brokerage account, but for institutional investors, they actually provide much more functionality because they not only provide custody and trading, they also provide a lot of OTC trading desks, as well as lending services. And their main customer of these prime brokers are large institutional players like endowments and hedge funds, etc. The traditional finance equivalent would be Goldman Sachs, Morgan Stanley. But in the crypto space, there's really only one big prime broker, and that is Genesis Trading. So Genesis was dumb enough to do business with Kwon, as I'm going to show you in a moment. Kwon got Bitcoin from Genesis, which was a pretty smart move. And then Genesis in exchange got garbage UST, which was the Terra Luna stablecoin that broke the peg and used to be worth $1 per token and is now worth just pennies on the dollar. We can see this back from the old days, just a couple months ago, May of 2022. Luna Foundation acquired 37,000 Bitcoin. Huge red flag here. They're using the plural for Bitcoin. That tells you they're not actually real Bitcoiners, but that's a small point. What we see here, though, is that LFG acquired 1.5 billion in Bitcoin, and in exchange, they gave $1 billion worth of UST to Genesis. Now, presumably, Genesis was smart enough to try to offlay this risk, but this is quite a bit of UST to get rid of, or to sell, or to otherwise hedge. So it's quite likely that this is one of the things that brought down Genesis Trading when Terra Luna and UST both imploded. Now, Genesis Trading was also dumb enough to lend out a lot of money to both Three Arrows Capital and Alameda and FTX. And this money, of course, is now permanently gone. So Genesis has not only been bad at risk management, they also seem to have a problem with timely and truthful disclosures, which I'm going to talk about in a minute, but I just ask you to hit that subscribe button if you're finding this video helpful so far. So it was on November 8th that FTX halted customer withdrawals. That same day, Genesis issued a tweet saying, "We have managed our lending book. We have no material net credit exposure. We have no exposure to any tokens issued by centralized exchanges, etc." Basically telling the markets that everything was fine and they had no FTX or Alameda exposure. The next day, they basically said, well, we had to hedge and move some things around and sell some collateral because we did have some risk. Fortunately, we only lost about $7 million, which for a multi-billion-dollar company is obviously just pennies. So that was the next day. The day after that, they figured out, or they finally disclosed, that they had $175 million that was locked in an FTX trading account. So I'm not sure why they didn't know this on November 8th. It may have been that FTX was giving preferential withdrawals to large institutional investors, and they thought that they'd be able to get their money out, even though the common person would not be able to get their money out. Either way, just 2 days later, 2 days after saying they had no exposure, they said they've lost $175 million, which was locked up in FTX. So what then happened is the parent company, DCG, had to do an emergency capital infusion into Genesis just to keep them going for another day. And so this was a gift basically of $140 million from the parent company to the child company. And then this turns out this was not enough. Just a couple days later, Genesis itself was forced to halt withdrawals. And this had a knock-on effect to companies like Gemini Earn, which we talked about, which had counterparty exposure to Genesis. So you can see this daisy chain of defaults happening. What's happened in the last couple days is that it's turned out that that $140 million infusion was not enough, and that Genesis is still teetering on the edge of bankruptcy. Over the weekend, it was struggling to raise $1 billion of fresh capital. They lowered that to $500 million and still were not able to raise it. And so this Bloomberg article came out late yesterday, basically warning, in which it was disclosed that Genesis has been warning potential investors that it's going to file for bankruptcy if it cannot raise this capital needed. Now, we know this morning that Binance has passed on infusing capital into Genesis. They were widely seen as one of the big players who could bail out Genesis, but it looks like that is not going to happen. And as the clock continues to tick, it becomes extremely likely that Genesis actually is going to have to file for bankruptcy. And again, this is a child company under the larger digital currency group umbrella. And so the question then is, what is going to happen to all the related companies? For example, will Digital Currency Group, DCG, be forced to sell off the Grayscale business, the GBTC business, to help raise funds to keep Genesis solvent? And this is something they can do as the parent company. They can liquidate or take capital from one subsidiary and move it to another, presumably. So this could happen. They could sell off Grayscale. This really is, Genesis and Grayscale really were the two crown jewels of the DCG empire. So this doesn't make a huge amount of sense, but it would be a move out of desperation. Will the parent company liquidate GBTC, the trust, in order to raise funds and dump all of those Bitcoin on the market? I think that's unlikely, given that it's still a great business. This is a business that, rather than being liquidated, should be sold to someone, because you get to skim off that 2% annual management fee. And so it might make more sense for DCG just to sell off Grayscale rather than liquidating the trust. Of course, if they liquidate it, we can always imagine the worst case scenario. That's a lot of Bitcoin that's going to hit the market if that were to happen. And we would expect lower Bitcoin prices, which is good for people who value Bitcoin and want to buy it below fair value. But it would certainly panic a lot of people, and it would not help the current volatility of Bitcoin. So what would happen if DCG just let Genesis go bankrupt and let this particular silo die? Well, it looks like Grayscale would be protected because it's in its own child subsidiary company. It's a little bit unclear, though, because there's this account, which some people say is reliable, some people say it's not reliable, has disclosed or has asserted that DCG owes, the parent company owes $1.1 billion to Genesis, the child company, via a previously undisclosed promissory note that has been hidden from potential investors. So this is one reason, presumably, why DCG is trying to raise all this money. So if Genesis files for bankruptcy, one of their assets would be this money that is owed to them by the parent company, and this could have ripple effects as well to the parent company. It's a little bit unclear. There are a lot of connections here between all the DCG companies, and this is something that the market is worried about. Markets are on edge. There's a lot of volatility as everyone's waiting to see what's the next company that's going to blow up. And I think that this daisy chain of contagion and counterparty risk that we've been seeing really since the Terra Luna blow up, it's been kind of a slow motion avalanche that's accelerated in the past couple months. This will continue to unfold. I don't think we're quite at the end of it yet. That doesn't mean that Bitcoin has not bottomed. Bitcoin can bottom ahead of this, but it does mean that we still need to hold on to our seats. And as I said, this has been a slow motion collapse or avalanche from Terra Luna to Three Arrows Capital to FTX Alameda to Genesis to BlockFi to Gemini Earn, as these different counterparties default on one another. And throughout the storm, it's very important to remember what's something that doesn't have any counterparty risk. What's the most secure digital asset out there? What's the most scarce digital asset out there that's a bearer asset that has no counterparty risk, that you can hodl and sleep well at night? And that is the Bitcoin on your hardware wallet. If you still have Bitcoin on an exchange, you're not doing this right. You need to withdraw that as soon as possible and hold it on a hardware wallet or software wallet where you control the private keys. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.